Hello again, friends, and welcome to my portfolio update video for the summer 2023. One small note about my old portfolio, which you can see on the screen right now. There you see the Euro stocks 50, which I included in my last video, which I made last year's December. I have to apologize for that. That wasn't a net return index, so the -4 you can see there with red line overcrossed. That was completely wrong. That was fake news by me, so please ignore that from my last video from December when I updated my portfolio. And I have not included that ETF anymore in this update I'm gonna show you next. But without further ado, as you can see on the screen now, there is my older portfolio. We're gonna go that through next. But another thing which I want to clarify is that between my videos, I will not tell every buy or sell I make to you, my viewers, because there is no point to anyone, as these are based on my own risk-reward calculations and valuations, and we all have different financial situations and different compositions of our portfolios, different levels of risk we want to take. Every portfolio for every investor is so different, so there is no value in me reporting every small buy or sell I make coming from my own actions, how I need to approach my portfolio. So yeah, these videos I'm gonna do every now and then. Last was last year's December, now we do one for the summer here. These portfolio videos are the ones where I keep things transparent and you get to see what I actually own. About my cash position, currently, in my own opinion, it is very much too low, and I'm hoping to improve it soon personally. Real problem if there is going to be panic starting tomorrow in the stock market, I would miss too many opportunities, so I'm looking ways to increase my cash position as for now. But now let's get to my current portfolio and changes that have taken place since last December, when I indeed made my last portfolio video, which you can see on the screen still now. Take a good look at it now, and if you need to look this old portfolio on the screen more right now, please stop the video right now. And we continue to my new portfolio, which you can see on the screen right now. So let's begin with the big things that has happened. I've sold Meta. I've made good money with it. I bought it for slightly undervalued old businesses, and I felt like, by old businesses I mean Messenger, WhatsApp, Instagram, Facebook. I bought it because I felt that those businesses were trading fairly valued or even a little bit undervalued in the end. I felt like I was getting metaverse bets completely free of charge with the stock prices that went even as below as under 100 with Meta not too long ago. Maybe the most weird thing in all the bad sentiment and negativity around Meta at the time was that everybody were so focused on growth slowing down for Meta, forgetting that ad business is still a cash printer with old businesses, and you could hear everybody shouting that Zuck is spending too much money. Well, in my humble opinion, if the problem truly is too high costs with personnel, for example, that kind of issues are easy to fix by ending some low potential projects and streamlining the organization, which Zuck did, and suddenly everybody is loving the stock again. Yeah, if your cost bases have just grown too much, you have hired too much personnel, those things are really easy to cut. The more harder part would be if there would be some underlying problems or significant competitors challenging your old and new businesses. Well, this wasn't the case, which the market didn't like. It seemed that market didn't like that Meta was investing too much money, and when that reverted, so did the stock price. Well, I did not quite get the craziness back then when I was buying Meta. I don't mind it. I made money with that panic myself, so I'm happy with it. I did my first buy in $170, and then I doubled my position at $100. And sold everything at $180, made 36% profit in 6 months, and that felt really good. Yeah, I just checked Meta stock price being $250 today. That is on the expensive side in my opinion. I wasn't imagining it go this high this fast. Obviously, when I sold at 180, my fair value went there, and I felt like that was the fair value, max fair value for the old legacy businesses, which I described earlier. Metaverse, impossible to put a number on that since it's so long in the future when that will actually start bringing cash flow for the company. It might be a good thing, it might be a bad thing, I don't know. I don't think many people know in the world. So that was a bet I was willing to have free of charge, in my opinion, in my valuation. And 180 was the place where I wanted to get out of Meta completely. I'm happy to return back to Meta shareholder once it becomes value investment again. Now, again, too risky for me due to competition, due to current much higher stock price than short while ago. Everybody is after Meta's businesses, and their business will be under threat in today's world of tech, ad business, social media, how we spend our time with our computers, or rather our smartphones. There will be competition for Meta always. The landscape is not, it's a bumpy ride for these social media companies, I think, especially for Meta with Metaverse. Well, going to my biggest position now, Alibaba, 23%. Plenty of videos here on my channel why I am invested in Alibaba. Go and have a look at them after this video. Shortly, business is great, but geopolitical tensions are depressing the stock. If China will remain in their senses and do not choose the path of Russia, Alibaba will be okay investment for me. Although in hindsight, I admit starting to buy it with too high prices already many years ago. Still, even though in the worst possible case, I will lose all my money with Alibaba if the world goes crazy. Despite that, I still want to have exposure to the fastest growing middle class in the world, that is China. Second biggest position of mine, Flow Traders, 17%. Here we have a growth company, and the success depends on whether the management's goals are achieved or not. Proved in COVID panic that their business model of making money with volatility in the stock market works. Should there be more volatility ahead in the stock market, Flow Traders would make lots of money. Liquidity provider for the markets that can have huge potential in my opinion, but risks are there for me too, because fintech is not really my best expertise. I can admit that, so there's the risk for me, but was too interesting opportunity to pass by for me, Flow Traders. Then third biggest position, and let's say my only third one that is really big position in my portfolio, Sprott Physical Uranium Trust, 16%. Physical uranium stored in warehouses, the only commodity play in my portfolio at the moment. Other commodities that are of interest to me would be oil and copper, but I don't feel time is right for them yet. In my opinion, this is the simplest way to play the uranium commodity market if you think that price of uranium might experience something similar in the future as it did in 2006 and 2007. As it seems that all other countries except Germany realize how green, safe and essential nuclear energy is for societies and the planet, there seems to be increasing demand for uranium in the future, but low prices have not incentivized production much yet. If suddenly there is a situation where uranium threatens to run out in the global market, power plant operators are willing to pay practically anything for the uranium left in the markets, as cost of uranium is very small in the cost structure of the whole nuclear plant, so running out of uranium is not an option for any nuclear plant. And the plant clearly does not work without nuclear fuel made of uranium, obviously. This is the investment thesis, to put it really shortly. Then, actually, a fourth big position, let's say so, with Geo Group and CoreCivic together representing 17% of my portfolio. These are private present operators from the United States. I know some people have ethical concerns about this investment, but my view is that there is no society on earth that can operate without presence. I think we can all agree on that. And like Republicans in the US, I don't immediately think that having a private operator doing incarceration and rehabilitation is pure evil, like many Democrats in the United States seem to think. Nevertheless, my thesis is that these two companies trade under liquidation value and are classic cigar butt type of investments due to assets they own. I don't care whether I get my money with government buying the assets of these two as long as they pay the market price, or whether I get my investment returns in the form of earnings if these two are allowed to continue operations also for the years to come. For long, they have already existed, and even though Democrats have promised to shut them down, well, they have not shut them down yet. And we'll see what happens in the future. But, yeah, they have tried to do it for a long time. Nothing has happened yet. You make your own thinking about that. Then, Intel 9%, hardly hit by the slowing semiconductor cycle, and I started buying, like Alibaba, this one too early with too high prices. I know that now, easy to say in hindsight. Still, my thesis is that Intel, due to its geographical location where it operates, has national security interest for United States and of course the allies in Europe. Should anything bad happen in China and Asia, chip market that is heavily there in Asia would experience turmoil and Intel would be instantly more valuable as a company. It's about supply and demand. I feel Intel is trading now in its fair value, so I could sell it basically today, but I'm keeping it as a hedge for the worst possible scenario where I lose all my money with Alibaba and world goes completely crazy. Well, you know what has happened then. I don't think that this is what will happen, but this is one more small way for me to be prepared for anything, which I want to be as an investor, and everybody should. Many great investors have said that it's firstly about managing risks and secondly about seeking for those rewards. There is wisdom in that, I think. Then Alphabet 6%. Due to increased competition from OpenAI and Microsoft in search business, I personally am not so sure anymore where this search business is going and what are the effects of ChatGPTs of the world for Google. I know I love YouTube as a business, obviously. Also, Alphabet's balance sheet is perfect, so Alphabet still has moat in my opinion, but maybe not so much than let's say a year ago in my eyes. But I have to say, I'm struggling to understand where these new innovations in ChatGPT and such are taking the market, how that will affect Google Alphabet's profitability, for example, in the search business. I have to admit I don't know, and that is uncertainty for me, and that is why I have been cutting down my position recently. Alphabet has gone up in stock price recently, and that is actually why also I have been selling my Alphabet position, trimming it down with good profits. Not good profits, but for small profits. All the time here, I think I have made two rounds of selling during the last months here, last months to put it. Overall, Alphabet and Meta both represent the huge US stock market along with some other mega caps. What do you have there? Amazon, Netflix's, Nvidia's, well, you know the mega caps of the United States. Personally, my guess is that it is difficult to find much value in Standard & Poor's 500 ETF and in these mega caps anymore. Money has just been flowing to these like crazy and the valuations have gone up respectively. I might obviously be wrong on this and they might be fairly valued, even undervalued, but I don't see that likely. Anyway, but big US companies is not the place now where I'm going and I would go to search for value anymore, as with these levels of how their stock prices have developed during the recent weeks, recent months, let's say. So I would look elsewhere in the world right now, or then small caps in the United States, at least for the time being, how things have been developing the last weeks. Then Carriage Services, 5%. Funeral home and cemetery operator in the United States with consolidation going on in their industry. Should do well in any cycle, as unfortunately people die all the time, and cutting costs on burial ceremonies of people in the United States, in the Western world, for the families in the United States, as Carriage Services only operates in the United States. These burial ceremonies of people there, for families of the deceased, does not seem to be, for me, the first thing you will start cutting costs if economic times get really tough. Maybe people first got from eating out, Netflix's streaming services and such, going to concerts, going to sports games or whatever. These are the things you start cutting first, and maybe food also. in how much you spend money on food, how much you drive your car or whatever. Those are the things you start cutting costs first, probably not from the burial ceremonies of your loved ones who have passed away, unfortunately. Carriage Services is a company that, according to me, should be recession-proof whatever happens in the economy in the coming months, coming years. Then, new positions of mine. Tyson Foods 5% and Eurofins 3%. Tyson is the biggest meat company in the United States, and despite all trendy people going vegan these days and eating vegetarian, I think steaks and hot dogs will have their market in the future also. Well, especially in the United States. I was in December holiday. I spent my holiday in Texas and Louisiana, and have to say the food there was amazing. Terry Black's barbecue was amazing. I don't know how anyone in Dallas can go vegan when you have that kind of restaurant in the city. Excellent food. Never mind about that. It was nice memories, good food, nice holiday. All right, moving on. Also, as Tyson's stock price just declined, there was a wave of insider buys taking place, so I too decided to add to my position just recently. Some management of the company started buying the company with quite significant amounts of money, in my opinion, so that obviously, not always, but sometimes can be pretty much a green flag what the management thinks about their company and how it's valued at the moment. Why did Tyson's stock price go down recently? Well, seems to me that that's because of temporary cost pressures weighing the stock down really short term, but long term things should correct, in my opinion, and this could be an opportunity with Tyson. And finally, originating from France but operating already as a global player, global business today, still owned and controlled by the founder, Dr. Gilles Martin, Eurofins provides many industries with lab testing services. Absolute compounder business in its history, and I am hoping for the same to continue for the future, as I study the company more to maybe add to my position and grow it bigger in the future. Lab testing services surely are a growth industry still, even though they have grown a lot through recent decades, recent years already. I think the lab testing market should just continue growing from here on to the future still. Well, that was it. My portfolio as it stands today, with very significant amount of my personal wealth invested in it. Remember, you can find in-depth videos of all the investments talked here on my channel, Arctic Money. So if you were interested in some company, especially out of these ones you just saw, go and search that video from my channel. And with that, I wish you all happy summer, happy investing, and I see you in the next video. Bye bye.